This is how to accurately read price structure. Price structure is how price data is simply represented. Price structure is how price movement, those data, the movement, how it is simply represented. That is what price structure is. Note, I did not say what move price. I did not say price structure is what move price. Price structure is the representation of price data on the chart. Price structure is not what moves price. Price structure is how price moves. When whatever moves it affects it, or a better way to say it, it is just how price is represented when it moves. What moves price? Because this is one basic understanding that will change everything for you. Because one common mistakes that beginners traders make is to think that because the market came up and came down, they think it's because it came up as per technical what they are seeing. It's because it created AI and made a low. That is what made price moves. No. This is what happens when what makes it moves affects it. This is what happens. It either creates a high and low, or creates a low and then a high. Do you understand that? So what moves price? What moves price is simply demand and supply. That is what moves price anywhere, in any field, in any asset, in any whatever. Even take it outside of forex, take it outside of trade. What moves price is simply demand and supply, right? Now that demand and supply can be driven by several factors. Demand and supply simply means if the want of an asset, or if the want of something is greater than its supply, price will definitely go up. Because now more people are demanding it, but then the supply can't meet the demand, so price goes up. While on the other hand, if the demand is less, but people are not needing it, people are not needing an asset or a thing or a product, people are not needing it, that will drive the price down, because now people are not needing it and the supply is excess, so that will drive price down. That's clear, right? Now this demand and supply, like I said, it can be driven by different factors: fear factor, greed factor, when people are confident. For instance, if a war breaks out and people are scared, when people are scared like that, they tend to demand some certain assets that they think is safe for their wealth, or they think is safe for their money, so they think they tend to put their money on that thing. But if people are confident, another factor is greed. If people think that something is going to have value, and they tend to be greedy about it, the price of that thing used to go up. That is basic fundamentals, right? So what moves price is supply and demand, and that supply and demand can be driven by several factors, right? What I just gave you is a foundational level of understanding fundamental analysis. But as retail traders, we don't really want to bore ourselves with fundamentals, right? Because our edge as retail traders, specifically as CFD retail traders, our edge is to understand fully what technical analysis is, how to read those price movements, how to understand price structure. Because the information available to you as retail traders, the fundamental information available to you as retail traders, will not help you to make a trading decision, right? Because let me tell you something, let me tell you a secret. Whatever happens in this world, before it happens, there are people who have debated about it. There are people who are aware about it, even before it comes to the news, to the general public. Now, all of those are fundamentals. You don't expect that it is when it comes to the general public that you want to use that information to trade. It will not work, because even before that news came to the general public, there are people in this world that we live in that have those informations, that have already made a trading decision with those information. Now, when it comes to the public, they're just using the public as an after effect of whatever decision they've made. Does that make sense? Now, this is a very deep thing I've told you. But then let's come back to technical analysis. Price structure simply moves by, let me take this out and do something for you. Price structure simply moves by creating highs, low, highs, lows, highs, right? Now, this is an example of price structure, price movement. Now, this movement is called an uptrend, right? Now, another way price moves is by creating a low, then a high, a low, then a high, a low. Now, this movement is called a downward movement or a downtrend, right? The first one I drew is called an upward movement or an uptrend. Then it can also move this way. This is the third way it moves. It moves like this, creating equal lows, equal highs, equal lows, equal highs, right? Now, this movement is called a consolidating movement or a consolidating trend. I just told you about three types of trends. The first trend I told you about is an uptrend. Forgive my writing, but it's an uptrend. The second trend I told you about is a downtrend, right? A downtrend. And the third one I told you about is a consolidating trend. Consolidating trend. So these are the three types of trend we have. Now, these trends are created by price simply moving this way. All of those three trends I just mentioned is created by price simply moving up or down, up or down, up, this kind of movement, right? Or this kind of movement. Overall, it goes up and down, right? So that's the basic thing I just want to pass to you. That price moves by creating. You will never see price moving this way. 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 You will never see it. You will never see price moving this way. That is why it's called a structure. It has a defined path. So it has a defined path. Do you understand? So that is clear. Now I told you about the three types of trend: an uptrend, a downtrend, and a consolidated trend. Now let's look at an uptrend, right? How do you define an uptrend? An uptrend is simply a structure that creates highs, higher lows, higher highs, higher lows, higher highs. Now this is an uptrend. It's an uptrend because it creates series of highs and lows. Now those highs and lows are called, for instance, this is a high, right? This is a higher low. Then this is a higher high. Then this is a higher low. Then that just keep repeating. This is a high because it was higher than the former price. That's what makes this a high. It was higher than the former price. I'm going to show you something, just a basic thing, right? I'm going to show you something that can trap you after just explaining the uptrend, downtrend, and consolidating trend. I'm going to show you something that if you know that you've mastered chart price movement, you've mastered price structure. So I said the reason why this is a high is because it is higher than the former price. It is higher than the previous price, right? That's why it's a high. Maybe price was previously on a downtrend, then it created a high, which we call change of character. Now we're going to talk about that later, but I'm just trying to explain why this is a high, right? Just keep in mind that this is a high because it was higher than the former price. Remember I said all of these are price data, because if you look by your right, where all of these numbers are, these are prices of gold, where price of gold has gotten to, where it's looking to get to, and all of that. So those are the numbers. So this is price data. Good. A high, after price creates a high, the next movement is called a higher low. It's called a higher low because even if price came down, it's still a high. Even if it's a low, it's still a high because that high is also higher than the former price. It's also higher than the former price. So it's called a higher low. Now, if I talk about this higher high and higher low, you get the concept of the previous ones I am talking about, which is higher and higher low. Now, if price moves up again, breaking the high, we call that a higher high because it's a high higher than the previous high. Exactly. It's a high higher than the previous high. Then it creates another leg, another move. Although this move is low, but is higher than the previous low. Do you get? Although the move is low, now you cannot compare this low with this low. These two lows, which one is higher? Is this one, right? The same concept here. There was a previous low at the bottom, but that low and this low, which one is high? Is this one. That's why it's called a higher low, right? Exactly. So basically, that is an uptrend, right? Good. So let me show you a downtrend. I'll show you a downtrend. Just hold on. Okay. Now, a downtrend is the same thing, but flipped to the other side, right? So a downtrend, the first move is called a low. Good. Now, then it creates a high. Even though it's a high, it's still lower than the previous low. So it's called a lower high. Even though it's high, it's still low because it's lower than the previous low. So it's called a lower high. Now, it creates another movement. Now, this new movement it creates is called a lower low. So remember, the first one is low, lower high, then lower low, lower high, lower low, lower high. So it just creates that movement like that. See, this is how price moves. This is how price moves. If there is tension globally, now let's go back to fundamental. If there is tension globally, no matter how that tension is, it's either that tension creates a higher high, it creates an uptrend, sorry. It's either that tension creates an uptrend, or that tension creates a downtrend, or that tension causes a consolidation. It will not, there is no other thing that it can do apart from this theory. It cannot go and be doing this. It can't do that, right? It cannot do that. So the last type of trend is a consolidation. So a consolidation, I believe you understand an uptrend, a downtrend. Now, consolidation. Excuse me. A consolidation creates equal highs, equal lows. It creates a high. Now you think, oh, it wants to break this low, but no, it's going to create another high. You think, oh, okay, maybe it wants to create a higher high. Nope, it's not creating a higher high. It comes down back. Now you think, okay, what's going on? It's just consolidating, right? Just consolidating. It's just consolidating. So it creates lows, highs, lows. Now, yeah, there's no higher high or lower low. There's none of that. It's just low, highs, low, highs, low, highs, because they are equal. Is that clear? Now let's look at an example. Let's look at examples on the charts, right? This is just drawings. Now let's look at it on the charts. Now, if I should zoom out on this chart data, this is the price data of gold, right? This is data representing gold price movement. You see that price is on a downtrend on the 1 hour time frame. Now, what is price doing? Price creates a low, a high, a low, lower low, lower high, a lower low, and now it's trying to form a lower high, right? Now, if you look closely, I didn't draw this. Let me just shift this to the side. When I was drawing this schematic, when I was drawing this structure, I did not draw this. I don't draw this. Now, if you look closely, these are two different movements. Now, that is the secret I want to show you. That is one of the secret things I want to show you. See, price dropped and went up. Now, why I didn't consider this? Okay, we'll get there. Don't worry, we'll get there. Let me just show you the basic structure, right? We'll get there. Just hold on. We'll get there. So that's an example of a downtrend. Raise lows, lower highs, lower lows, lower highs. Now you can say that's how price went down. That is simply how price went down. Let me do this so you see clearly. That is simply how price went down. If you've added this to your strategy, no matter what that strategy is now, I want to go into strategy details, right? I just want to talk about structure. Now, no matter what that strategy is now, if you put this into consideration, you will know that because it has done this and done this, you have to use your strategy to look for an entry. Now you already know that price is going down. You just have to use your strategy to look for an entry. Now, whatever that your strategy is, tied with structure, which is very important and the foundation of every strategy, you will know that this price is supposed to go down. It is supposed to go down. If your strategy gives you, because it's supposed to do this, it can do this too, right? It can do this. Now this is called, I said it earlier, change of character, because it just break a previous high. We're going to talk about that too, right? But just stay with me. So I'm saying, if you see this and you see this and you see this, you see a low, a lower high, lower low. Now your strategy will give you an entry pattern. What the strategy is supposed to do is just to tell you where to enter at that particular time, because you already know that price is coming down. So if your strategy gives you the confirmation, you take the trade and it comes down, because surely it's going to come down. If your strategy gives you that confirmation that okay, it's ready to come down, that is clear, right? Let's look at an example of an uptrend. I want to take a look at this movement. Now, what is going on here? Price created an up, a high. Price created a high, then a low. Okay, not this low, sorry. This low now, and this high. See? Sorry. This high. Then it created another low, then another high. Now, this is not very clean, but still the same basic terms. Now, again, you notice that I did not consider this as a low. Why? I'm going to show you that later on, but just stay with me, right? Just stay with me. Now, see, those things are what are the secret of understanding price structure. Those things that maybe not to consider this as a low is a low, but it's not valid. That's the basic truth. Like this previous one, I also skipped. Like, it's a low, but it's not valid. The same thing applies here. This is a structure. This right here is a structure, but it's also not valid. It's not valid. Now, if you mark this as a low, a lower high, a lower low, a lower high, if you mark it like that, you will have series of losses, because this is not a valid structure. The valid structure here is a low, a high, a low, right? So, but I'm going to tell you why it's not valid. I'm going to tell you why it's not valid. Just stay with me, okay? So let's go back. So this is not very clear. So I want to show you a clear pattern of an uptrend. Although it's still the same structure, but let me show you a clear pattern. So look at this. I think it's very clear. Look at this here. So if you look closely, you see that price created a high, a low, a high, a low, a high, a low, a high, a low, then a high, a low, a high. Right? Now, this low formed a high, which is higher high, higher low, 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 then higher high, right? So basically, that is how an uptrend and a downtrend moves. When price is going up, that's whatever makes it goes up. We don't want to know. We don't really care. As technical analysis, we don't care. We're just seeing the movement. Not that we don't care. We know that if we are to use those information available to us right now as retail traders, for these information available to us, we're not going to make profit. We're not going to make profit, so we don't really look at it. But then this is how price moves: an uptrend or a downtrend, right? Now let's try to look for a consolidating trend. Let's look for a consolidating trend. Let me go to a 4-hour time frame. Now, time frame is another thing I'll talk about, but let's just devour this trend first, right? Or let me go to another pair, because gold most times is just trending upward and downward. It hardly creates consolidations. Even the consolidation it creates, okay, let me show you what happened yesterday. Consolidation created yesterday, even though it's not very much, but it's still a consolidation. Now look at this. So price created from a lower high, it came down to a low, then it created a lower high. But then instead of it to break, it created another low, then created another high, created another low, and it's forming another high. Now this is a classic example of consolidation, right? So this is what consolidation is. Look at this. This is what it is. It's creating series of highs and lows. They are equal, or they are not passing each other. They are just equal, right? That's what consolidation is. Is that clear? Come on, that is clear. Don't play with me. If it's not clear, drop a comment in the comment section and ask a question in the comment section, and I'll reply you, maybe with a video or something. But I believe it's clear, right? If you are enjoying this video so far, please like this video and subscribe or follow if you're watching on TikTok. Let's look at something else. So we understand that price movement is upward, downward, upward, downward, upward, downward, upward. Right now, this movement, higher, low, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low. Now, this movement is an uptrend. We've made that clear. Now, we have a downtrend, a down, a low, a lower high, lower low, a lower high, a lower low, a lower high. Right now, this movement is what? Come on, say it. Yes, a downtrend. Then we have another kind of movement, which is create a high, equal lows, equal highs, equal lows, then equal highs, then equal lows, just like that. Right? And this trend is called what? Good, consolidating. So let's look at something else. Something else is, if you notice, is now for this we're not going to because there's nothing much to look at in a consolidated trend, but let's look at the uptrend and the downtrend. Now, something you will notice is each time price breaks a previous, for an uptrend, each time price breaks a previous high, right? Look at this, it breaks the previous highs. Now we refer to this as break of structure. Now we're coming to change of character, choke. So this is break of structure. This behavior is called break of structure because it is breaking structure. It is breaking structure. It's breaking structure, creating new highs, right? Then we have for a downtrend. Is breaking structure downwards. This is breaking structure upwards. It breaks pullback. Now that's another thing I want you to take note of. Pullbacks or retracements. I refer to it as pullback or retracement. And those retracements are these moves, these legs. So each time you have a break of structure, you are expecting a pullback. Each time you see a break of structure, you are expecting a what? A pullback or a retracement. Each time you see a break of structure, you are expecting a retracement or a pullback. That's clear, right? Now this is just basic to understand. If you just understand this, trust me, you can make money with Forex. If you understand this, you can make money with Forex. Just stay with me, you see. You can make money with technical analysis because you understand structure. Now for a downtrend, it breaks structure downwards. You can see it breaks structure downwards, it pulls back. When it pulls back, it breaks structure downwards again. See that? Now it's pulling back again. You are expecting to what? Break structure downwards. BOS, break of structure. Now when price is trending, it can either reverse, retrace, or consolidate. Now this is powerful. Each time price is trending, that trend can either retrace, that is, creates a break of structure, then retraces or pulls back, then continues, right? Or it change direction totally, which is now we've reached change of character, change direction totally. Or it consolidates, it just hang in a particular, it just goes into consolidation trend, just goes into consolidation. Those are the three things you can do. So retracement, change of character, change of structure, right? How we refer to it is change of character, or consolidate, right? So let's draw that out. So just stay with me, guys. Stay with me. So let's draw it out. So price was initially going up, right? Now we're seeing an uptrend. I said it can either pull back, then continue. Every true retracement come up with a continuation of that particular trend. If it was a downtrend, when it retraces upwards, it continues downwards. If it's an uptrend, when it retraces downward, it continues upward. So that is retracement. Retracement is tied to continuation, right? Or